let's head on out and bring in our next guest. We have Scott Bauer, the CEO of Prosper Trading Academy, is joining us here to help us get ahead of a big week in terms of earnings, in terms of economic data. Scott, welcome. Thanks for giving us part of your Monday morning. No numbers today at 8:30 a.m. Eastern, as I mentioned, but a big week ahead in terms of inflation data, retail sales. Obviously, jobless claims are going to be a major focal point for everyone in the coming weeks. What are you going to be watching most closely, and why, Scott?
I think we have to really take a look at tech and the NASDAQ and FANG stocks, since those are the ones that have just absolutely exploded, gone over the top, and pretty much led the broader rally overall here. Are these things going to hold in here? And if they don't, what happens? What happens if they falter a little bit? I wouldn't be surprised if we start to see some profit taking. I mean, that would just be normal in some of these stocks, Ben. But is that going to take the rest of the market with it if that happens?
Yeah, I always say without participation from the other three majors, no matter how strong the NASDAQ is, it's going to need confirmation at some point
Right.
from the others. I mean, I guess in some ways, Scott, this tech boom that we've been seeing, I mean, you can understand why, especially as the focus shifts as we are working from home more. Some of the big names like the Amazons and Netflix, some of the beneficiaries of this. But I guess as you allude to, it seems like if a sense of realism starts to set if this pandemic and the uncertainties in terms of jobs are turning and the labor market seeing some sort of normalcy at some point, if that doesn't come into play soon, maybe it could be kind of an eye-opening experience, and maybe tech, even though it has been resilient, could start to reflect some of what we're seeing, for example, in like crude oil. I mean, clearly the energy markets haven't been a reflection of some of the optimism that we've been seeing in the indices.
Yeah, and my big question is, what if they do start to, I'm not even going to say roll over, but if there is, some profit taking in there, where is the money going to go? Is it going to go into cash? Is it going to go into another sector? So I think that's going to be real important for the overall market. And, I'm still very, very concerned about the small caps. We've seen maybe more volatility in the small caps recently, both on the plus and the minus on a daily basis here. And those have, obviously lagged the general market, the general comeback rally that we've seen over the last few weeks here. And I just, I'm a little, let's call it pessimistic about the small caps as well.
Scott, I can see why, and actually you just sort of gave me a good segue into my next question. How big of a deal is rates right now? Because, well, for one, we're starting to hear of how the Fed funds rate is suggesting that we could see negative at some point. We certainly have seen a reflection of that in the shorter end. I've been talking 2-year, I'm watching the 5-year, which has been coming off, and ultimately these small regional banks and some of the other, lower rates would impact the Russell, other indices, and ultimately the broader market. I mean, in general, when you think about it, can you talk to us about what you've been seeing there in terms of the yield curve and in terms of treasuries in general?
Sure. So first of all, Ben, in terms of the small caps, I mean, the regional banks will just get absolutely shuttered, in my opinion, if we go down to negative rates. Just 6 months ago, maybe 12 months ago, I would have never thought that negative rates would have been an option whatsoever. However, as small of a possibility it is, the Fed does still have a plan for that, not to enact it, but a what-if scenario. Futures markets are pricing in negative rates by January of 2021 right now in short-term rates. That would be absolutely devastating for the banking market. And I just don't see personally how we could, I don't want to say recover. The markets do find a way to recover, but I don't see without help from the financials how this market can really get back on solid footing, especially if we do start to see some of that rollover, some of that turnover from the tech sector.
Yeah. Scott, I wonder if that's maybe what gold is reflecting. I mean, it's been hovering and holding bid levels for the most part. It's well off the 1788 level. Don't let me, again, mistake the price activity we've seen recently with anything other than what it has been, very much consolidation. But the fact that we're consolidating in that area that's been on recent highs, I mean, major hurdles up above 1800, something, I think it was the 1920s. There's a big level up there, 1923, I think it is, or something like that. But for the most part, gold is suggesting kind of what you're saying. Investors maybe are saying, hey, what happens if this market starts to roll back over again? Who are the buyers on the way down going to be at this point?
There's no question that gold almost has like the Fed put right now, where there's a what if
Right.
scenario that is really holding the price of gold up. And yes, like you said, it's off of its highs at the 1780-ish area, whatever it was. But to only be trading 4% down from there, whatever it is, it is holding very
Yeah.
strong. And I think that it will maintain its bid until the economy starts to show some semblance of recovery
Yeah.
here, and until maybe the Fed makes clear, which I don't see happening anytime soon, that negative rates are not a possibility.
Yeah, negative rates are a focal point there for gold traders. And also, Scott, some of the inflation concerns, unknowns amidst all the stimulus that we've been hearing about and everything else that's been playing out there. Scott, thanks for giving us part of your Monday morning, starting
Sure.
the week with us here, helping us getting ahead of some of the economic data that's coming our way this week, and taking a look here fundamentally what's behind some of the price activity that's been in play. Trader Scott Bauer, check him out. He's the CEO of Prosper Trading Academy. He's joining us here this morning, and again, always appreciate it. Scott, thanks again.